So we're going to be talking about how to trade high impact news releases, right? So trading the news events and knowing when to get in prior or post the news even is crucial. So the understanding of news and the volatility injection is derived from understanding order pairing, and we went over order pairing in the core concepts, right? So in a bullish scenario, if we are bullish and the market has taken significant sell stops prior to that news session, then the news will immediately move in one direction higher to pair the orders with the existing buy side liquidity, those buy stops, right, engineered prior to the session. And if we are bullish and the market is yet to take significant sell stops prior to that news event, then the news event will have a fake move. Then they will call that a Judas swing, right, to run those sell stops in the marketplace in the form of external range liquidity low or external or internal range low, accumulating the necessary sell stops to then reverse the market, taking it higher to pair those orders with existing buy side liquidity, those buy stops resting at the marketplace at that time. Now in a bearish scenario, if we are bearish, inversed, right, and the market has taken a significant buy stops prior to those news session, then the news will immediately move in one direction lower to pair the orders with the existing sell side liquidity, those sell stops engineered prior to the session. If we are bearish and the market is yet to take significant buy stops prior to the news event, then the news event will have a fake move, right? That Judas swing once again to run those buy stops in the marketplace in the form of an external range high or an internal range high, and then accumulating the necessary sell stops to then reverse the market, taking it lower to pair those orders with existing sell side liquidity, those sell stops again, resting in the marketplace at that time. So order pairing at a news event, there are three scenarios we can look at. We have that continuation, we have that Judas and then continuation, or we have a complete reversal, so we have a Judas reversal. So over here we've got a schematic of that continuation scenario, right? We've got our premium and discount levels. Going over here, looking where the liquidity is resting, right? We've got those engineered liquidity over here, failure swings, more failure swings, and we're forming a market maker buy model in this scenario, right? So sell stops have been liquidated over here and down there, smart money reversal down here, and then let's look, when is that news event, right? We've got that 8:30 or 10 a.m. news folder, and then we look for, did sell stops get rated prior to the news? If yes, then it's highly likely the news will just go one direction and shoot up, right? And we can see that over here. We already ran significant sell stops before that news release, and we have engineered liquidity above market price, right? So it's highly likely price will just continue up and take those buy stops and not go down once again. So this is a continuation scenario. So with that news event coming up at 8:30 or 10 a.m., right, that red folder, they want to pair up their sell stops with the buy stops from willing buyers above market price, and we can see that over here, because those were those failure swings, right? Over here also those failure swings, and remember all those sell stops have been liquidated already, right? So price has no business to go down anymore, and we're gonna look for those buy stops to pair up the sell stops. Now this is a 10 a.m. scenario, right? Let's say at 8:30 a.m. we did not run significant sell stops yet. What will happen first, right? We get that Judas and then continuation scenario. So first of all, we talked about that continuation scenario, right? Does significant sell stops have been taken yet? If yes, then we have a one-sided direction with the news release. But at 8:30 and there are still sell stops to be have, then we can look for those sell stops. So there will be a fake move coming up with the news release, and we call that a Judas swing, right? So with 8:30 having a Judas swing, taking out sell stops, and then it's ready to continue up for those buy stops. Same over here, only inverse, right? A sell scenario. We've got this continuation pattern over here, and then we see our discount level here, our premium level up here, and then we're gonna spot liquidity first, right? Where are the failure swings? Where are the equal highs or lows? Where are the trendline phantoms? And we can see those are formed here. So we have a basket or a liquidity pool of sell stops down here for order pairing, and then we have those buy stops rated over here, and then we were reversing before news event. So we already liquidated those buy stops before that news event, right? So highly likely we're gonna see a continuation lower one-sided. So this is again scenario 1, continuation, because we already have liquidity taken prior to that news event. Now for that bearish scenario, let's say 8:30 a.m. is high impact news and we did not rate some significant buy stops, right? So what is most likely to happen? We can get a Judas and then a continuation, right? So we have over here a Judas swing with the 8:30 news event, and then we get a reversal. So we have a Judas reversal over here, right? So we're going down, we're going up from this 8:30 news event, reversing down, taking all the buy stops, and then we're continuing our way down into the real area where we want to go, which is that liquidity pool of sell stops down here. Right, over here we've got a E-mini Nasdaq 100 futures chart, right? And think about the core concepts again, right? We're dipping into a internal range liquidity pool over here, which is a daily fair value gap. So after internal range liquidity has been tagged, where do we want to go? Right, we want to go to external range. So we're looking from internal to external. So that's step number 1. Now we're thinking about time frame alignment too, right? We're looking for a daily external range. So we went into a daily internal range, and now we want to go to a daily external range. And what do we use with our time frame alignment? Daily structure, and then we go into a 1 hour time frame, right? So over here we've got that 1 hour time frame, right? Outlined below down here we've got that daily fair value gap, right? That internal range liquidity. Next up we're gonna spot our engineered liquidity or failure swings, right? We've got a bunch of failure swings up here, so there's a lot of liquidity here, right, for the buy side. We've got sell stops down here, we've got sell stops down here, and here, and here, and these sell stops all got rated prior to that news release, right? Because we're gonna zoom in a little bit more later, but this all happens before that news release has happened, and we hit that higher time frame POI, right? So let's go to the next one, which is a 5-minute chart. So again, time frame alignment, right? We go from a daily PD array into a 1 hour structure, and then we can zoom in from our 1 hour into a 5-minute, and then we have an even more clear picture to get in on a trade, right? So prior to that news release, we've got this CPI over here, right? High impact news. But what happens before that news impact, right? We already took out sell stops here, those sell stops down here, and then those sell stops down here, and then more importantly we hit that discount array, right? Internal range on the daily. Now we want to look for that external range on the daily. And with all these buy stops being engineered prior to that news release, it's highly likely we have one-sided continuation with news release, right? So like this you can anticipate price action to go one-sided, or that we have a Judas swing before that news release happens. Now I do not advise trading CPI because you can get slipped very hard, so this is just an example, and again, I don't advise trading CPI. We've got those buy stops up here for order pairing, which makes sense, right? There's no order pairing anymore down here because we already took out those sell stops prior to that news event, and all that engineered liquidity has been taken out with that news release. Right over here we've got a crude depiction of market structure, right? So what does our eye go to first, right? We're looking for low resistance liquidity, and we're gonna look for old highs or lows which are being ran before the news release, right? So let's see, where is the liquidity? We've got this very clean trend line, and your eye should immediately go there, right? This is all the low resistance liquidity being formed prior to that news release. Now after this has been formed, what did we do after? Right, buy stops have been liquidated, right? So now we're gonna see at what time is the news release. Was this news release before we took out these buy stops or after, right? If we have news release after we take out those buy stops, it's highly likely again to be a continuation, right? A one-sided direction with news release, because order pairing already happened up here, so their price has no business to go down, and we have massive engineered liquidity down here, so it's highly likely news will push price down and then liquidate all that low resistance liquidity. Now if we have 8:30 news before that buy stops have been liquidated, right? And it's highly likely we're gonna get a fake move first and then a continuation after. So think about it, right? Is liquidity being liquidated, or are buy stops or sell stops being liquidated after or before that news release? And then we can think about, is it more likely we have a continuation, or is it more likely we're gonna get a fake move first and then a continuation? So how does that look like on a British pound US dollar chart, right? We've got that daily chart over here, and again, external range liquidity, right, over here. So what is more likely to happen after we take external? We want to go to internal, right? We have some internal range liquidity down here, pushing price lower and lower and lower. We've got now a failure swing, right? And then the displacement happened down here. So we've got internal range liquidity on the daily. And now let's zoom in a little bit more. Right, we got that 1 hour chart, right? Now we're in a higher time frame POI, right? So this daily fair value gap is our area where it's highly likely that price will move down further, right? Continuation. Now let's look at where is a news event. We have that 9:45 a.m. red folder up here, and then we have to decide where has liquidity been taken already and what is more likely to happen. Are we gonna have a continuation lower with news, or are we gonna run buy stops first? So if your eye went to this high over here, that is very nice, because then we have an external range liquidity rate, right? So we have a fake move first, taking out those buy stops, because those buy stops have not been taken out prior to that news release. You can see that fake move up and then a continuation down lower, completing that market maker sell model eventually down here. And think about, we're coming from a higher time frame daily fair value gap, right? And if you think about the daily time frame again, we already had those buy stops ran on external range and then displacing down lower. So this is the highest probable PD array to go down from. So those buy stops have been liquidated. And then if we dive into the 1 minute time frame, we can see even a more clear picture, right? So think about that high that got liquidated on the 1 hour, right? It's also still inside a 1 hour fair value gap. We can see price action goes up above it, and then we're breaking structure down here, and you can see this first premium array is being respected, right? We have this breaker and then this fair value gap here. Price breaks down even further and then starts to accumulate before that news release. So we've got PMI, right, at 9:45. You can see this little fair value gap here offering resistance for price, and again we already ran those buy stops, right? So order pairing happened already above market price. Now we're going to look for order pairing below market price, which are these sell stops for order pairing into buy stops. And then where is the liquidity, right? We've got these failure swings, right? So engineered liquidity, trend line phantom. So it's highly likely price action will just continue down with the news release, because we're already ran buy stops before the news. Right, so over here we've got an execution picture, right? Those execution, there's a lot more execution, but we're gonna focus on this piece over here, right? We just looked at the 1 hour chart and we got that high over here, which is this high, which get ran, right? So those buy stops got run, and you can actually see a sell execution just prior to that news release over here has been activated, and then going for those sell stops, right? So this is a perfect scenario where you are aware that buy stops have already been ran, and it is highly likely this high impact news release will just drop price, and you can clearly see here that sell execution into those sell stops for order pairing and closed down here. So perfect trade. So over here we've got a New Zealand dollar, US dollar daily chart, right? As always, we're gonna look at the PD arrays. Where are we in premium or discount, and what is more likely to happen? Are we gonna trade lower or higher? So we are spotting some failure swings down here, right? And it looks like we're gonna go bearish, because we're respecting the daily fair value gap up here, and we're respecting this new daily order block, right? So zooming in, again, time frame alignment, right? We go from a daily PD array into a 1 hour structure. So we're looking at this 1 hour structure over here. Price goes into the daily order block, respects it, pushes down lower, leaving equal lows down here, right? And then we see this little swing high over here. So when we're talking about two news events, right? Let's say you have a high impact news event at 8:30 a.m. and then you have another high impact news at 10 a.m. and you see that 8:30 a.m. news event runs buy stops and then continues to decline you can anticipate that next news event to continue its way down, because we already, remember, took out those buy stops, right? So the first news event, we took out those buy stops, and the second news event, it's highly likely we're going to have a continuation. So you can actually position yourself after that first news event into the second one, and I will show you some executions later. So over here we've got that 8:30 news, right? Buy stops have been ran. You wait for that news release for price action to show its hand, what it wants to do. Do we run significant buy stops? Yes, we do, right? We took out these buy stops and then started to decline with displacement, and then 10 a.m. we've got that news event down here. So it's highly likely this fair value gap prior to the news event will stay respected and then continue down, and it looks something like this, right? Bearish order block being respected. Think about all those up close candles, right? They should support price lower once it is in a sell program. So that happens over here. Bearish order block, price rejects it. Another bearish order block, price rejects it. Another bearish order block, and that is prior to that news event, right? We displaced lower, and then you have that fair value gap down there. And this is what it looks like with execution, right? We see this buy stops have been ran over here. Price drops lower, 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 lower. This is prior to the news event. So if you have that knowledge, is there already buy stops ran, and is it more likely that we have a continuation with news or a reversal or a Judas swing? And in this occasion we know buy stops have been ran already, right? And then this is not even risky, this is just logical thinking, and we can see this drop down here, executing, taking a partial, and then eventually closing down at this low. Perfect trade once again. Right, we've got a British pound US dollar monthly chart, right? So we're looking for that monthly draw on liquidity, which was that internal range liquidity here, right? We're gonna be talking about that news reversal right now. So now, earlier we talked about that continuation and that Judas swing into continuation, right? And now we're gonna talk about that news release. And now we're going to talk about that news release that will be a full-blown reversal, right? So monthly drawn liquidity, that fair value gap. Let's go into a lower time frame. We've got that daily chart right now, and what is price action doing? We're supporting over here, right? And then NFP release is on this day. So our drawn liquidity is that monthly fair value gap, remember? Let's go back one more slide. We are aiming for this monthly fair value gap. There is a daily order block supporting price prior to that NFP release, right? That high impact news release. And then we zoom in into the 15-minute time frame. So over here, so where is the market at prior to that NFP news release, right? It is in a premiums when we are bullish, so it's likely to reverse, right? Then there are failure swings below us too, right? We've got these failure swings down here, right? And then it failed to run significant sell stops prior to that news release, right? So it's highly likely we can see a reversal from that news release. So market will seek discount and sell stops at the release before reversing and pairing those sell stops up with the engineered buy stops above marketplace. Our NFP news candle is over here, right? And we can see it drops straight back down, taking out all those failure swings, right? And then a full-blown reversal will happen because we hit that higher time frame POI, and then finally we take out those sell stops, right? Because remember, if we didn't take out any significant sell stops, it's highly likely it will reverse afterwards and take those sell stops. So at NFP release, the market is in a premium when we are bullish. So what is more likely that it will do? So if it's in premium, it's more likely to drop back into discount with the news release, right? But there has to be failure swings below us, which is the case in the previous chart, right? And then it failed to run those significant sell stops prior to that news release. So the market will seek discount and sell stops at the release before reversing, and then pairing those sell stops up with those engineered buy stops above marketplace. Over here we have some more lipstick on the chart, right? We've got that discount into premium range, right? Before the news release, where is market price at, right? We're in this discount levels, right? Because the news release is over here and we are still in this premium area, so it's more likely to draw lower. Are there any significant sell stops being taken yet? No, they are not, right? Because we've got all these failure swings down here, failure swing here. So it's highly likely NFP will continue down into those sell stops before reversing. So now we accumulated those significant sell stops, right? We have order pairing below it. After that NFP release, dropping down into the daily discount order block, and then over here we can see order pairing happening and then continuation up. So how does that look like on a lower time frame? And can we even trade this? And is there an opportunity to get in to go for those to go for that monthly drawn liquidity, right? That monthly fair value gap. Yes, we can do. We have some buy stops over here, right, for order pairing. So there are engineered buy stops up here and engineered buy stops up here, and eventually above here, right, that monthly fair value gap, which is the drawn liquidity. Dropping into the 5-minute time frame, we see those buy stops for order pairing are present. We hit that discount array, the daily order block, right, after that NFP release, and remember we took all those significant sell stops, right? So over here we're starting to break structure upwards, and then from there on out you want to see all those discount arrays being respected again, right? So we have that fair value gap over here. The bodies of the candles are respecting this fair value gap, and you can actually see it pushes up further and further and further, and then leaving this mitigation block up here, and then price finds support over here on that mitigation block, continuing up higher. And if you can spot it, we've got that new PD array, right, that redelivered rebalanced candle here. So this area over here doesn't go into this fair value gap anymore, right? We know now why is this a breakaway gap, right? Because there's a balanced price range over here already, and we can see price continues up higher and higher and higher, and then dipping one more time into this fair value gap to continue up, taking out all those buy stops for order pairing. Outlining that order block over here, right, where price action can go up from further. We've got that breaker block, or actually a mitigation block over here where price finds support. Another mitigation block up here, right, with a fair value gap. So we have coupled up these PD arrays with each other, highly likely to reject and then continue its way up.